In March of 2025, a senior Apple director walked into a private meeting and gave a brutal assessment of the company's highly anticipated AI technology. He explicitly called it ugly and embarrassing. That leak shattered a carefully constructed facade. Just a year and a half earlier, Apple executives publicly dismissed concerns that they were falling behind in the AI race. But everyone inside the company knew the truth. Siri was essentially broken. To see the gap, you only had to run a simple test. When a user asked to compare smartphone specifications, Google's Gemini delivered a detailed breakdown of the hardware. Siri simply handed over a list of Google search links. The contextual failures were even worse. When instructed to play the Friends theme song on YouTube Music, Gemini played the correct track immediately. Siri opened the exact same app, but played a completely random track that just happened to have Friends in the title. In 2024, the company tried to course correct by announcing Apple Intelligence. They advertised a brand new Siri capable of executing complex in-app actions based on whatever was currently on your screen. But those contextual features never arrived for iPhone 16 users. If the assistant couldn't handle a request, it simply passed the query off to ChatGPT. Apple's most recognizable piece of software had become an empty shell, relying on competitors to handle basic functions. Behind the glass walls of Apple Park, the engineering and marketing departments turned on each other. Engineers accused the marketing team of advertising features before the technology even existed. The marketing team fired back, insisting they were only working with timelines the engineers themselves had provided. Because those timelines were missed, lawsuits for false advertising began to mount. The internal drag was so severe that it took the Siri team a full 2 years simply to figure out how to remove the word "Hey" from the "Hey Siri, wait" command. Then, the talent began to leave. In June of 2025, Ruming Pang, Apple's head of foundational AI, abruptly quit to join Meta. He took top engineers from his massive 100-person language model team right out the door with him. The company tried to negotiate a backup deal with Anthropic, but talks collapsed over money. Out of time, out of viable options, and facing massive shareholder pressure, Apple had to abandon its internal AI efforts. They turned to their biggest rival, signing a deal to pay Google $1 billion a year to lease a custom version of Gemini. This diagram shows exactly why they made the deal. Google's custom model runs on an estimated 1.2 trillion parameters, a metric used to measure an AI's overall capability. Apple's own internal model tops out at a puny 150 billion parameters. To protect its reputation for user privacy, Apple insisted on a strict condition. This massive Google model must run entirely on Apple's private cloud, powered by proprietary silicon chips inside Apple-controlled servers. With the security infrastructure in place, a bizarre loop remains. Apple is now paying its primary rival to provide the intelligence its own team couldn't build. While tech giants trade billions in this arms race, they may be ignoring a simpler metric: whether everyday consumers actually want mobile AI in the first place. This chart shows recent data reported by CNET, revealing a clear trend of consumer apathy. Only 11% of users choose to upgrade their phones specifically for AI features, a 7% drop from the previous year. Meanwhile, 3 in 10 people explicitly say they do not want more AI on their devices. Samsung offers a clear cautionary tale here. They heavily promoted their Galaxy AI to drive a massive wave of phone upgrades. But in earnings calls since that launch, executives have primarily focused on market weakness and economic uncertainty. Companies are pouring massive amounts of capital into building AI models from scratch, taking on immense financial risk for a product with declining consumer demand. This diagram breaks the AI market down into a specific framework. Think of it in 3 layers: the hardware at the base, representing the data centers, the operating system in the middle, representing the AI models, and the apps sitting on top. Apple originally wanted to build the operating system layer. By failing to do so, they accidentally stumbled into what we can call the commoditization play. AI models are rapidly becoming cheap, standardized commodities. Instead of building one, you simply rent an existing model and focus your resources on the user-facing apps. And the financials of this specific rental are fascinating. Google already pays Apple $18 billion a year just to remain the default search engine on iPhones. This means Apple's $1 billion AI rental fee is essentially paid for by Google itself. This strategy perfectly protects Apple's bottom line. Their highly efficient MacBook chips are stealing market share from Windows. And thanks to explosive demand for the iPhone 17 in China, Apple's phone sales are up 29% year over year. The legend of Apple's internal innovation has cracked, but by abandoning a failing project and leasing the tech instead, Apple is avoiding the ruinous costs of a race their customers may not even care about. They aren't building the future, they're renting it, and they're doing it using the very cash Google pays them to stay on the iPhone.